Good Wednesday morning, everyone. Thanks for joining the Market Chameleon pre-market show. If you're new to the show, welcome. And here he is, the main man, Mitra Pargamonic. How you doing, D?
Good morning, Will. How are you?
You want to start with a disclaimer? It's up for everyone to see.
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not a registered investment advisor. We're not a broker-dealer. We're not telling you what to do. We're just sharing ideas. If you need professional advice, call your registered investment advisor, call your broker. That's what they're there for, to give you advice, provide you with guidance.
All right, perfect.
There's the disclaimer.
So what's going on in the pre-market this morning?
Yep, let me share my screen. If you guys have any questions, please put those questions on the live chat on YouTube. Will's watching it. He'll read them back to me. If you want to come on a show and ask your question live, we also provide a link to Zoom. If you click on that link, it takes you over to Zoom. Once you get there, there's a button, raise your hand, press that. Once we see you, we'll let you in. You don't have to turn on your video camera. We will be able to, everybody will be able to hear you. You could ask your question, navigate us to what you're looking at. But that's always really helpful. While we're waiting for questions to come in, Will, I think we'll take a look at the pre-market report, see what's going on in pre-market hours. Then I'll take a look at, we'll take a look at a couple earnings reports we have, get some insights, how the stocks so far have been performing post earnings, how the straddles have been performing post earnings, or have they been profitable on average, unprofitable, how frequently were they profitable, how frequently were they unprofitable. We could take a look how so far the company is reporting, how they've been doing, and we could compare that to historical benchmarks.
All right, perfect.
Sound good? All right, let's take a look at the pre-market report. And these are our stocks trading in pre-market hours. We have our most active stocks, our biggest percentage gainers, biggest percentage decliners. Coming down here, I see 60 stocks made our percentage gainers list, 93 made our percentage decliners list. So from this perspective, we're looking like a more bearish bias at the open. I'm going to filter this list down to S&P 500 companies. We want to take out all the small cap stocks. A lot of them make the list. We'll want to take out ETFs, leverage products, closed-end funds. Let's remove them. Focus only on S&P 500 stocks, see what's going on there. To do that, I'm going to use the filters here. There's one in ETF. I'm going to, by dropping it down, I get a list of ETFs. When I select one of these ETFs, the list below will get filtered by the holdings in that ETF. So let's look at SPY. That's the S&P 500 ETF. And now this list got filtered by the holdings in SPY, which are the S&P 500 constituents. And here we see 7 stocks made our percentage gainers list, 24 in the decliners. From that perspective, looks like we're lining up right now for a bearish bias at the open. Quickly, just want to mention here, when we're looking at these lists, these are the symbols. This is the price it's trading at in the pre-market hours, up 6.6%. This is the volume. And let me close this. Market cap, this little E here, that's an alert letting us know that the stock just reported earnings either yesterday after the market closed, or it could be today before the market opens. After the news is released, the stocks can trade in the pre-market hours. Most likely, those are reacting to the earnings release and whatever the company or management is saying about their outlook going into the future. A couple standouts here, I think the Google and Microsoft. Right, so Google tech stocks, Google right now down 6.9% in the pre-market. They reported earnings yesterday after the market closed. And I believe that might be a new 52-week low for Google. Let me take a look. We can use these filters here to further, to filter down further. And let me see which ones are trading at a 52-week low in pre-market. Okay, so not yet. Let me come back to that. Let me just click on Google, make sure. Okay, so here's the 52-week low, 95.27. It's trading 98.11 in a pre-market, but down 6.5%. And they did report earnings yesterday. Microsoft, same thing, reported earnings yesterday. Obviously, the market is looking at those earnings and whatever the management is saying, and they're getting discounted today. There are no.
I think we have another big tech tomorrow. I think Meta comes out tomorrow, and that stock's been
Meta,
beaten down as well.
Let's take a look at the earnings calendar just to see what's coming up. Oops. So on this earnings calendar, it's defaulting to today's, and this is going to be today. A couple of them are reporting already before the market opens. So here, this is TMO, ADP, Boeing, just reported today before the market opens. Meta, which is Facebook, that's expected today after the market close. And you could see here, they're going to have a conference call today at 5 p.m. So these are already reporting. If you click on this, you could go to the press release, read about their earnings. You could see here, they're scheduled to have press releases at 8:30. So these two already started it. Boeing, that's scheduled at 10:30. So they did issue a press release. They came out with earnings. However, after the market opens 9:30, they're scheduled to have a conference call at 10:30. That could also impact the stock greatly because it's not just what the company did this quarter, because traders are pricing in future expectations, right? So not just what happened this one quarter. What we want to know is what is the management telling us about their future outlook? What are they giving us guidance? Are they seeing, slowdowns, or are they seeing upticks? Are they, what do they have in store for us going forward? That will be important. At 10:30, they're going to talk again. That could be another market moving event, right? Once they start talking, once they start answering questions from analysts, potentially giving us guidance, telling us what they're seeing, that could still make that stock move. Sometimes they reverse, right? You've seen that before where an earnings comes out, there's a reaction, management then starts answering questions from analysts. They might give you their guidance. They might tell you about the current mood of the market, and stocks that have been up can go back down. Stocks that have been down can go back up, depending on what they say. But here you go, Boeing, not moving that much already. They're down 1.6%. So here the expected move was up 4.9, up or down. In a pre-market right now, they're trading down 1.6%. If you're looking, there is a filter here people ask me about that I want to mention before we move on. And once these stocks report, right, these stocks that are reporting already today before the market opens, there's nothing you could do to position yourself, take off risk, or do something to take advantage of a volatility of a move at this point, because the news is out, right? So once the news is out, they're digested, and the stock will get repriced based on what that news is. At this point, this is kind of over. You can't really position yourself pre-earnings. But Meta, that's still reporting today after the market closed. So you could still take action. Yeah.
We did have I mean, we can get back to Meta. We did have a question from John in the chat that I missed. He was asking, if you look at XLK, can you see the price action pre-market to how everything in the tech sector is moving based on the Microsoft and Google move?
Let me take a look. Let me see if I understand the question.
Well, let me go back to switch pages. So John was asking, and I'm sorry, John, I missed it. It was earlier.
XLK.
Yeah,
So
he was
like,
asking, does it, if you look at XLK, can you see if the price action is similar to all the tech as Microsoft?
Yeah, so here's SLK. These are the holdings in SLK, XLK. So we could see here, these three. So Visas and XLK, SETG, EMPH, these stocks are up. Two of them reported earnings. And when they report earnings, a lot of times they're just reacting to firm specific risk, right? So the Visa, might be doing well. Microsoft might not be doing well. So they are reacting to their own reports. That's why a lot of people like to play volatility around earnings, because it's a short-term play and you're out and it's not related to the market. The news is related to usually that specific stock. But
interesting that Visa is even in the XLK.
Yeah, I guess Visa is probably more of a technology company. That's how they view it now, as maybe like a data technology company, right? Because what are they really doing is just facilitating transactions at this point, right? Their technology is facilitating transactions, moving money around and clearing it. So, but look, I don't put them in the XLK. That's how.
No. That's how
the S&P.
That's how. I mean, that's how it's been structured since the beginning.
Right, and they could move them around. They could maybe. I think that Tesla right now is not in the technology, but they could move it in. Who knows, right? They could reclassify it. Right now, I think Tesla is in. Let me see. Is it in the consumer cyclical? Here it is, Tesla. It's in XLY. So Amazon, Tesla, they're not in the technology sector, according to this S&P 500 sectors.
That's very interesting.
Hopefully I answered the question. I don't know if that's.
Yeah, no, that was perfect.
Okay. Let me come back to the earnings calendar really quickly, show you guys a filter that's commonly asked. And I think I left off showing you guys, this is today's earnings calendar. And today's earnings calendar, some stocks are going to report before the market opens, which we could see already is happening, right? These are reporting before the market opens, but some are still reporting today after the market close. And you could still take some action today during the market. The market will be open from 9:30 to 4 o'clock. So you could do, your stock trades, your options trades. You could hedge your risk. You could look for opportunities. You still could do that, before the news comes out after market today. And the same thing for tomorrow stocks before the market opens. Today would be your last day to take action. So from that perspective, if you're going to do something or you want to do something in a particular company before the news is released, if it's released today after the market closes or tomorrow before the market opens, it to you would be the same thing, right? Today, you'd have to take some action today before it closes because tomorrow before the market opens, the news will be out. And we got a request to filter out stocks that are reporting today after market close or tomorrow before the market opens. And to do that, you have this list here. So here, today after the market close or next day before the market opens. Okay. So here we go. Meta today is going to expect to report after market close. MasterCard, you could see that's scheduled for tomorrow before the market opens, right? Merck, that's also scheduled for tomorrow, but it is before the market opens. In other words, from the perspective of, hey, here's a stock and there's something I want to do ahead of earnings, that today would be the last day for these stocks. Does that make sense to everybody? And let me know.
Yeah, seems like it makes sense to everyone.
Okay. Let's take a look at insights, what's been going on so far. I'm going to go into here under earnings, and let's take a look at the stratos. How have they been performing so far this quarter? Okay. And let me take this, let me look. These are all the stratos so far in this quarter. So we're third quarter. We captured 347 companies that had options, reported earnings, and then we could track those options. I'm going to filter this list though to S&P 500 companies. Okay. So I'm going to drop this down, SPY Holdings, which are, again, S&P 500 companies. And here are the results. So far, the stratos, they've been having a pretty strong performance because on average, if you looked at all the companies, the stratos were profitable from the long side. 116 companies reported that in the third quarter that we could capture the straddle, and we do have conditions in there if things are too wide, or we will skip that observation. But I want to look at the statistics so you guys could understand what's going on. When we look at straddles from the long side, right, doesn't mean that the majority of them were profitable. Okay, a lot of people look at like these win rates or how frequently. You could see that only 36% of the straddles, if you bought them the day before earnings and you sold them the next day after earnings, so you held them from end of day to end of day, only 36% of those straddles were profitable. 64% were not profitable from the long side. Okay, so we're looking at it from the long side. But what about that average return, right? Because the ones that are profitable, remember, when you're buying a straddle, it could go to infinity. Theoretically, that's not possible, but there's no limit, right, to the upside of the straddle, because the stock could go up 10%, it could go up 20%, it could go up 50%, who knows? But the straddle doesn't have a limit to the upside. So when we take the average, right, of the straddles, if we take, we average out, here are the winners, here are the losers. On average, if I did every straddle, what was the return? And you can see here up 4.9%. In other words, that those straddles, that the gainers, those moves, those profits exceeded the losses by wide enough margin that on average, out of 116, if this is what you did, if you said, for each straddle, I'm going to buy $1,000 worth of notional, I'm going to buy a call and a put for each straddle, and I'm going to risk $1,000 in notional, right? Every time. Doesn't matter. So sometimes if the straddle is expensive, you might buy one. If the straddle is cheap, you might have to buy 5 of them to risk $1,000. And if you did that 100 so far, out of these 116 companies that reported, okay, majority of them will have ended up being losers, right? 64%. But if you did that so far, on average, it would have returned positive 4.9%. Okay, does that make sense? Hopefully to everyone. So let's take a look at how that compares. So this is the third quarter we're in here right now. So third quarter, you could see if we compared it to the same 116 stocks, okay? So we're looking at these 116 stocks, and then we compared the same exact stocks to the second quarter, first quarter, and so forth. We could see that in the third quarter, the winners and losers, the frequency of wins versus losses is the same, right? First quarter was a little bit better. And you can see here, this gained 4.9%. Third quarter, 3-year average, it was a loss of 3%, right? So even though the frequency of wins and losses were the same, here we're looking at 4.9% gain versus 3-year average of minus 3%. And it looks like 1, 2, 3 quarters in a row now. This is the third quarter in a row that it would have been better to play the under than the over, right? So you're playing the over-under move. If you're buying the straddle, then you're saying that I think the actual move will be over the predicted move. If you're selling it, you think the actual move will be under the predicted move, right? So here, if you're buying it, you're thinking it's going to be over, and that's the side, right? On average so far, that's the better side. And here we could see this here is shown graphically what we're seeing here. And here's the trend. This is the 3-year average. On average, they lose, right? But last 1, 2, 3 quarters, it's been a gain. And volatility is going up. We've been talking about it, right? It's much harder right now with interest rates going higher, cost of capital going higher, discounting future cash flows, and trying to predict, future earnings is going to be much harder. And that's why, and stocks will become less liquid. And we're kind of seeing that right now being reflected, right, in the earnings moves, that the options have not yet, been caught up to those. Let's come down here. This shows a distribution of the returns of the straddles. And here we could see straddles, right, that were negative, right? They're down a little bit. So 3-year average 66.5%, 63.8. Straddles that were profitable, they were up from the historical average, 36.2 versus historical average 33.5. And even these on the extreme sides, right, are up. Straddles that gain more than 100%, more than doubled, 8.6% of them. 8.6% of the straddles more than doubled. And that compares to a historical average of 4.1, right? So that's double the historical average. Straddles that gain more than 75%, 12.1% of those versus 6.5% 3-year average. So Will, I'm kind of coming up to the...
Yeah, D, we did have a question. When you were looking at buying the straddles, it was negative 30% of the time. That means selling them would be positive the 64%. That's correct, right?
Right. So 64% of the time, right, if you sold it, it would have ended up being profitable. 36 unprofitable. But keep in mind that if you did this every time, you would have been a loser, huge loser, right? It would have been, on average, a huge loser from the sell side. Okay, so you got to think of it. You got to think of it that way. You can't just look at this. A lot of people look at this and think that's what I'm going to do, but you got to look at. This is why we're showing you. but your average returns would have been negative. Think of it this way.
So even though you're winning less over time, your returns are better.
Yeah, and this is the last 116. I'm not saying that's gonna. I don't know what's gonna happen going forward. I'm just saying that this right now is what the data has shown us, that what's going on right now is that even though that more often than not, the straddles were overpriced. The times when the stocks actually did move outside that expected range, they were more extreme, than the markets were implying, to the point where it was positive, that long straddles were positive. Okay.
All right. Perfect.
All right.
All right, my friend. We're right up against opening bell. It's 8:27, almost 28. Any last thoughts for the Chameleon community before we go?
Yep. No, thanks everyone for joining. I hope you guys stay safe out there. Have a great trading day, and hope to see you guys tomorrow.
Thanks, Steve. We'll